What's going on, traders? Welcome to the channel. I'm John. That's my trading partner, Genius. We trade options here. All right, so we are going to talk about and cover really quickly how I'm making 65% in 2 days, 50% in 1 or 2 days using covered calls. Honestly, in my opinion, covered calls are one of the simplest ways to dip your toes in income trading. So this isn't advice, but anyone who is looking into it and wants like the simple step, tiptoe into it, this is the way to go. All right, so let's just talk about the markets really quick. You can see clear uptrend. This is the SPY, S&P 500, kind of moving, ebbs and flows, ebbs and flows. We could see some corrective action coming up soon, but the big one, the big mamba we're talking about is crypto. So I'm in Mara right now. This is MARA, and the stock has been performing very well lately. You can see we gapped up, filled the gap recently, and I've just been taking advantage of these big upward movements in the stock. And so with that, what we're talking about is owning 100 shares in stock. And with that, with Mara here, when you own 100 shares, you can basically sell a call against those shares. And what has happened is yesterday I ended up closing. I did a lot of cancels here because I figured I'd get some value in showing you the setup. So I'll show you that in a minute, but let's talk about here these two right here, my 95 strike calls that I've been messing with. So what happened is earlier in the week, a few days ago, I opened up a covered call and collected $345 in income. So by doing this, I'm saying I'm putting a limit order on my 100 shares, and I said, hey, 95 call, here we go, let's do this. And for taking on that risk, I got paid $345 in income. And by doing this now, 2 days later, the stock did move lower. And you can see I was able to pocket basically a good majority of that in just 2 days, from November 8th to November 10th. And what I collected was the difference here from 345 to 121. And that's like 224. Oop, 120, 224? Yeah, that's correct. It's early. So anyways, by doing that, I mean, what is this, like 64, 65%? That's pretty good. 2 days, $224 in income. I will take that all day. That's now money I can recirculate into the account, grow the income snowball further, put it into speculative trades if I think something will do well. So it's just a great way to do these setups, and it's pretty simple. So we'll go into setting up a trade. Because Mara is up now about 9 or 10% today. I'm gonna, excuse me, I'm going to open a new trade against that. And what I want to do first is we want to go to call and sell. And I own 100 shares of Mara. I want to sell, and I want to actually go out maybe 1 or 2 weeks out. So I'm going to look at the November 26th contract date, and I'm looking at some expectations of Mara moving higher. Like, this is a really powerful pattern, and honestly, I think we could see anywhere from like a 20 to 30% upside from where we're at. So I want to stage my account for that and be prepared. And it just depends on your risk management, what you're interested in, where you think you want, what do you think you want to do with the shares? Like, if I'm really like, hey, I want to get rid of these shares and collect a lot of income, then what I'll do is I'll set up a trade here at 693, like at the money, $71 a share. This would give me $693 of profits, but I have to wait until expiration. And then what is likely to happen if Mara moves higher, then I lose my 100 shares. I get $690 of income at that point. And that is enticing in a way. But since I'm very bullish on this stock, I think it can go much higher. I want to go up about 20, 30, maybe 25% from its existing trading level. And I want to make a bet there. And by doing this, when I set a covered call, it's almost like putting a limit order on the stock that says, hey, if we get to expiration, we're above the strike price that you're set up to trade, then we will take away your shares at that price. So what does this mean? Let's talk about this a little more. Earlier you saw at the money, $700 basically. Really cool. That does sound enticing. But since I think Mara can go higher, and or if it stays neutral like where it's at, I want to either collect income and not lose my shares and hold on to it for longer. That's what I'm doing in this case. So I'm going to go to the 100 strike. This is about 25 to 30% away from its existing price level. And by doing this, I'm going to collect $140 in income. And what I'll be doing at this point is I'm saying, hey, if we get to above $100 a share at this level, at this expiration date, I'm selling my shares at $100 a share. And so that difference here, if we go 30 points, so 70, or let's say 100 minus 70, that's 30 times 100 shares. That's $3,000 in profit on top of the 140 that I'd collect here for taking on this risk. So that's kind of neat because, 3,140 definitely looks a lot better than 690 in my opinion. And that's the risk I want to take. So I'm willing to do this. There is no real guarantees until we get near expiration or until I close out this trade. But basically I want to go call, sell, and I'm looking at this 100 strike, and I'm looking at a pretty good probability of profit, meaning that the odds that we go this high are pretty low. It's basically less than 10% of a chance. But if we do get there, I'm going to make profits no matter what. Really, the only time this is bad is, say, if Mara drops very significantly lower. If the stock price goes higher to, say, $100 a share, or so, I'm still looking at collecting the profit from this options trade. But if we go lower, I'll collect the profit from the options trade and I'll still hold on to my 100 shares. So it's only really risky if the stock moves much, much lower, like from 70 to, I don't know, 30 or so dollars. That could be really bad in the long run. We don't like that. So based on that, let's just say if we're back in this $30, $40 level, that's not great. But again, it depends on your bias in the stock and what your expectations are. So like we said, I'm looking at, say, about this 140 level and or the $100 level in the stock. Long term, I'm very bullish. I think it will go much higher. And it looks like that Mara call did go through. So I now have a covered call set up at the $100 strike. And I am saying, hey, by this date, I don't think we'll be above $100 a share, and if we are, then I'm willing to let go of my shares at that price level. That is a good way to look at this. Another one, if you have a smaller account in Robinhood, this video is going to explain how to trade small accounts using Robinhood.